awo nno oteramu n'ennamba yo n'omwaka gwe wazaalibwamu, amannya go gajja kwereta automatically. Awo n'ojjuzaamu n'ebirala bitono nnyo ebyetaagisibwa ng'ennamba y'essimu yo, email address yo ne gy'obeera, era nga bino osobola obbisanga emabega wandaga muntu yo. Then n'osubmitinga nga kamesagi kajja direct ku ssimu yo mu ddakiika ntono nnyo nga kiwedde.
Good morning, taxpayers of Uganda, and welcome to another episode of Tax Mchuzi. My name is Anan Priska, and I'll be your host as usual. In studio today, we shall be discussing understanding rental income and voluntary exposure. We'll hint on voluntary exposure for a bit. And to walk us through this discussion, to walk us through this conversation is amazing. Lodia Vicky, she's coming all the way from Boulevard in the Tax Literacy Office. Lodia, you're very welcome to Tax Mchuzi. Welcome back again.
Thank you. Thank you, Priska. Good morning, our viewers, taxpayers out there. My name is Lodia. I'm happy to be here today to discuss things concerning rental income and voluntary disclosure.
Okay.
I'm happy to be here.
We're very happy to have you on. As we had you, I think, like 2 weeks back.
Yes.
Yes. Yeah. So it's nice to always see your familiar face. So today, like I said, we're going to talk about rental income and voluntary disclosure. But we'll start with rental income. Lydia, what is rental income?
Thank you, Priska, for this opportunity once again to come and discuss what rental income is. As usual, as has been my tradition, let me start with the simple things for our taxpayers before coming into rental income.
That's a good strategy for a teacher.
Yes.
Start with the basics. And
from
then
the basics, of course, we begin digesting what is rent.
Okay.
Yes, what is rent? Rent is, of course, a payment, including, of course, like the premiums or any amount for a consideration for you to use or occupy a property. Okay. So
if I stay at an apartment or I have a kazigo I'm renting, what I pay is rent.
Yes.
Right?
Yes, you're paying rent.
Okay.
So in our discussion of rental income, of course, we see now the rental income as the total rent derived by a person in a financial year. You get it, eh?
Derived by the landlord?
Yes, by the landlord or the owner on a property, which in this case we refer it as immovable property.
Okay.
In this, the immovable property can be land
a house
or can be building.
Okay.
Now, the rental income, of course, comes after you've gotten the rental income. There are allowable deductions that are always allowed. The expenses that you incurred and the losses that you incurred towards generating that income. So, in that we get what we call the rental income. So and this rent the property should be in Uganda. Get it?
Oh, specifically in Uganda?
Yes.
Okay, what if it's abroad?
We consider the property should be in Uganda. And the income being handed from Uganda.
Okay.
Yes.
Okay, so you said that when you're deriving rental income, you're going to remove allowable deductions?
Yes.
So what are some of those allowable deductions? If you could just shed a little bit more light for the taxpayer.
Okay. Before I also go on to allowable deductions, Priska, let me talk about the players, actually the key players who are involved in the generation of rental income. From here we have 2 key players, and the key players is the landlord and the tenant.
Okay.
Or the landlady. You get it? Landlord or landlady. In this case, who is a landlady or a landlord? Here we look at the owner of the property who lets out its immovable property for a price to another person. And this person, in this case, we refer him as a tenant. Now, a tenant is one who occupies this property. Yes, for a price. Okay, so that those are basically our key players in the rental income. Of course, along the way you will realize that there are other agents that come in, say the brokers.
Yes.
You
And
get
there's also
it,
property managers.
The property managers. In this case, we look at now what is their intention. Are they earning? Are they the ones earning income, or they are earning something what we call like commission? You get it.
Okay.
So here the rental income is being earned by the landlady or the landlord or the property manager. You get it?
Yes, yes.
So that is where we begin. We begin
from
classifying what is the rental income. Is it, are you in business, or you are basically earning the rental income, which we are discussing today? So for the expenses, of course, that you've already asked me, there are expenses that are related to the generation of that rental income.
Okay.
Say maybe your
like maintenance,
yes,
garbage
maintenance,
fees.
Of course, yes.
Yeah, like
whatever you incurred related to
maintaining the property,
generating that income. However, when you look at our tax law on rental income, it has like the specifics on what expenses, the camping. You can, like in the an amendment for 2021, 2022, it has a camping on rental.
Okay.
You get it? Like for individuals, Priska,
I have my property.
Yes, you have your property. The law only allows you to like claim expenses up to 75%.
Oh, okay.
Okay? On your rental income. That would be what will be allowed.
Max. Yes.
But this for us to allow also, it's subject to verification.
Oh, okay.
Anything can happen, yes. So we need to verify whether those expenses really incur towards the generation of that income. And of course, after allowing those expenses in that particular year, that is the 2021, 2022, the tax rate applicable was 30%.
Okay.
You get it? So
that's 2020,
2021, 2022.
Okay.
In the same year for the companies, unlike for individuals that the camping was at 75%, for the non-individuals it was different. It would allow all the expenses.
Oh, wow.
Yes.
Okay.
Yeah, it was something that we just didn't repeal, but the companies would allow all the expenses related to yes, the generation of the rental income.
Okay.
Yes, that is on the expenses and how they are, of course, what extent
allowable
would allow them.
Okay.
Yes.
So that's, you say 2021, 2022?
Yes.
So then 2022, 23, what was the situation like?
Priska, if you actually look at, we've been having, actually rental tax is one of the taxes that has received a lot of changes.
Yes.
Yes. 2022 came with a more simplified and a new change. Wow. Yes.
Okay.
And first of all, the tax rate changed. That is for the individuals.
Okay.
From 30% to 12%.
Wow.
Okay. And we brought back the threshold in place here at tax.
And for non-individuals?
For individuals.
Individuals, okay.
Yes, for individuals you will, of course, determine all your gross income for the year. Okay. Then you deduct their threshold, which is 2,820,000. The threshold, my dear taxpayers, is the amount that government does not pay or levy tax on. It helps you to reduce your tax liability. Instead of the tax being levied on the gross income, you first set off what is not taxed by law.
Okay.
So what remains
is
where we apply the tax rate. And for the case of individuals, we apply the 12% on that. And for companies, where we allow them, where the expenses are capped to 50%. Yes, this time.
From being limitless.
Last time, remember it was open. This time we have limited it to 50%. So you can claim your expenses to a limit of 50%. Also, these expenses that we have given you to a limit of 50%, we also need to verify it. Okay.
And how do you verify? That's like looking through someone's return?
Yes, we look at the records. Did they really incur this?
Like they say they did.
Your returns. There are some cases where you see someone's return having extremely an expense that does not relate. You get it?
For example?
Just for example, I have my rental. Then I bring an expenses of like painting Bishop's house. You get it?
Okay, that's extremely.
Yes, it's different. It's different. You get it? Maybe painting, it can relate. Maybe I did that. You get it?
If you're painting the actual.
Yes. So for companies, the capping is at 50. Only you can claim expenses up to a limit of 50%. Then the tax rate of 30% applies. Yes, that is the new tax law as relates to 2022, 2023. And there is nothing that has not yet changed, so we are still having the same law in place applying for rental tax.
Okay, that's good progress. This year, nothing new yet.
Yes, nothing new yet.
Okay, so you talked about how, through someone's returns that they've filed, we can keep tabs on, maybe what expenses or double check. So when the return filing deadlines for rental income payments,
Thank you, Priska, once again. Return filing for rental tax
and payment
and other income tax types apply the same. Actually, of course, we follow a financial year by default, which runs from July to 30th of June. Within the first 3 months from the beginning of the financial year, that is from July to September, we expect someone who has rental income as an individual to submit for us what is called a provisional return. Provisional in this case is a forecast.
Got you.
Yes, what
estimate,
you estimate what you expect to get in the next financial year.
And for rent, I think it's very easy to estimate because these rooms I'm charging this. Unless you're planning, it's very easy to forecast. Yeah,
it's very easy to forecast. And of course, these returns that we normally require our taxpayers to communicate, of course, that's the communication. It's not something that is fixed, that is static. In case you fall short of like the customers, they are not renting, you can amend it. You get it.
So is there like a specific time you can amend only up to this time?
Anytime, as long as changes happen within that period, you can amend it. You get it. So that you give us a clear, why you amend it, we're trying to see a clear picture of what is in your business.
That's true.
Yes. Then
that's for the individual.
That is for the individual. And for the companies, those who have rentals, for the retirement funds, for the trust, you get it. By 31st of December, we expect them to project
the
provisional. And of course, for the final return, by 31st of December, we expect both someone who's an individual having rental and a company to have submitted for us a final return for the previous financial year. So That is on the return filing. However, there are some tax head that come up according to your nature business. Yes, you are in rental, but you could be having employees that that help you manage that rental property. And these employees earn above the 235,000 per month. In that case, the law requires you to register for pay as you earn. Where you have a commercial building, Priska here, and you earn above the 150 million, you'll be required to register for VAT. Of course, if in case you're also a designated withholding agent, you also register for withholding. Why do I bring all this? The income tax obligation of filing return for rental will differ a bit with the additional tax heads, that is pay, that is VAT, and the others. This one come with an obligation of the monthly filing of returns. Every month by the 15th of the following month, you will be expected to give that communication of what transpired in the previous month. So that is on
what returns someone in the
returns.
rental income business.
Yes.
Okay. All right, thank you. So you have been very elaborate in breaking down, these tax obligations for, let's say, a landlord. But what happens in case someone is unable or fails or deliberately, refuses to file these returns that you've just shared?
Thank you, Priska. Once again, there is deliberately refusing to file. Then maybe you
face some challenges. It is a bit difficult.
But of course, we will not know those challenges unless you communicate. For those who deliberately don't file the returns, what we advise you, dear taxpayers, is file that return. Okay? To avoid issues like penalties. When you don't file those returns because you don't want it, there's a penalty that comes. Just imagine, Priska, if my return is due by 31st of December, and I reach January of the next year, I have a penalty already of 200,000. And by the way, this 200 applies for each month that I have not submitted my return. You get it?
Yes.
So such things make your tax liability. Your tax liability more. You end up paying more taxes than what the law requires you. So what we always advise our taxpayers out there, please play your tax obligation at the right time when the laws require you. But there is also an option, like if you're engaged, maybe you're out of the country, maybe you have some challenge, you can place an application to file a return later. You get it? Yes, but remember here, the payment of tax will always remain as per the due date. So you're only requesting to file the return later, but you have an obligation to pay that tax within that time. So there is nothing that normally is tied or fixed. There's always a way out for a taxpayer.
And speaking of that, in case I am just really put to the wall and I can't, let me say, pay that particular tax that I'm supposed to pay, can I talk to URA that, maybe Mbanje Mpola, pay in installments, or is there such an arrangement?
Yes, Priska, as I told you, that URA is governed or run by human beings. These human beings understand the taxpayer. Okay? Yes, you have a big liability. The only thing, by the way, that I always see is the communication. Please talk to URA. Explain your challenge of not paying the whole amount at once. you will enter in what is called, say, a memorandum of understanding or installment payment. Where you will be required to pay that amount in bits. For someone who is in rental is an individual, the law actually allows you to pay in 4 installments. First quarter, second quarter, third. By fourth, you can complete. You will be complete with your what? Tax liability. However, you can even choose to pay once. Yes, depending on how liquid you are or how your financial stand is. So we have that mode of installment payment. The only thing required is communicate to your respective station or the person concerned, and will understand you and you will be helped.
That's true. I like what you say, that URA is made up of human beings. Yes, there is a human face. We really understand. So, Loda, you have a bunch of questions coming in for you. So, and most of them are coming from LinkedIn. So, I feel like this is a good time for us to, respond to some of these. John Bosco at Here is asking, I would like to know the owner of the property and the one who rents who is supposed to pay the tax. I think you sort of hinted on this.
Yes, I hinted. Of course, the person who pays the tax, the tenant pays the money to the landlord, but the landlord receives the income. So we tax the person who receives the income. At the period, at a certain period, we expect he or she to communicate to us through that return. That look, in this here, this is how much I got. Okay. From A, B, C, D, these were my tenants. A maybe pays 400, the other one pays 500, you get it, eh? The growth in that particular year is what we tax. So the landlord, the landlady
is the one to talk to URA. Okay, John Bosco, I'm sure you got your response. Then Ronald Ndolimana from LinkedIn is asking, what happens if I am a tenant who subrents part of my office space? What happens if I am a tenant who subrents part of my office space?
Okay. It's a tenant.
He's subrenting part of the office space. So it's like, you're the landlord, you give me the space, me Priska. Then Priska, I subrent it to Paul.
Yes. So now, Priska, here we look at like, you're already like in business, okay? Yes. You've opened a small business for yourself. So declare to us that income that you're getting
from that
business. Yes.
Oh, so now I have to declare that I get from Paul.
Yeah. Declare for us that income so that the applicable tax rates can apply. Yes.
Ronald, there you go. Okay, this is Andrew Kayondo saying, the knowledge I have on income tax is income / money earned minus expenses / input. That's correct, right? Okay, let me. Then I remain with a profit which is taxable. So if I use 200 million to put up my rentals, why wouldn't you allow me to first earn back my input of 200 million, then I start paying the taxes? Thank you. Will it come out clearly?
Yes, Priska, for you to claim like for the input or the expenses that you have incurred, except the camping, then you should be having a special treatment, maybe. But if you're not under any special treatment for that, like an exemption, then the law in place will apply. Will only come to the 50% if you're a company, then we tax the rest with the 30%. Then for those who are individuals, we only allow the threshold and we apply the 12% tax rate.
Okay. So the money that you incur to set up your rentals, that's not an allowable expense. If it falls within the 50%, it can be allowed.
Okay. It's allowed.
All right. Okay. Okay, thank you, Lodia. Simon Odo from LinkedIn. Hey, LinkedIn is on fire today. Is it right for a tenant to pay rent, that's to say ground rent, yet they pay house rent? And what happens if the landlord fails to pay the ground rent? Okay, so this person, is it right for the tenant, I pay ground rent, then I also pay house rent? What happens if the landlord fails to pay the
Okay,
ground rent?
Priska, for this case, normally we have what is called rental tax, then we have property tax, okay, or ground rent.
Okay, okay.
What normally happens is the ground rent is paid by the owner of the building,
Okay.
not the tenant.
Not the tenant.
You get it, eh? Then the rental tax is what you pay to URA. But the property tax is normally charged by the lower local government, say KCCA,
okay.
maybe the municipal that you are. The difference is on rental income tax and the property tax is for rental. We charge on the income that you've earned from letting out your property to another person.
Okay.
You get it?
Yes.
For a price.
Okay.
But for property, here it is on a commercial building. They don't look at whether it's you, the owner, or another person. As long as it's a commercial property and it's, yes, you have to pay.
Okay.
Remember, for us rental, if it is occupied by you, it's not. But if you've let out for a price, it's when we expect you to pay the rental.
Okay.
Yes.
That's very.
So for the taxpayer, the ground rent is paid by the owner of the building. It's not me, the tenant, unless you've agreed between you and the landlord that please help me out. It's your own agreement, but in common sense, it's the what?
It's for the landlord.
It's the landlord, the owner of the property.
If I have my rentals and let's say 3, I have 5. 3 are occupied for the year, but 2 I failed to find tenants. So it's always, you only pay rental on the 3 that are occupied, right?
Yes, you only pay income for what you have had.
Okay,
yes, and that's why normally this amendment come in. You can amend your the returns are allowed for you to amend, because I can say project that I'm going to get 9 million in my 3 doors, okay, and in the course of this one year, in 3 months, maybe one was not occupied. Left. So what I'm going to communicate is exactly what income I have earned. But the issue is, or the challenge normally comes out of the record keeping bit.
Yeah.
Some people might not be good at keeping records for every transaction that went along those. You get it? Like in this month, room number 2 was not occupied.
In this, yes. Room number 2 escaped in the night.
Yes, Priska, if I've not earned the income for that room, it will affect what I projected. So what is more important is keep track of your transactions, keep track of your business, the income that you get from your business on rental. It will help you actually project the right figures and help you pay the right tax. Okay? Yes. Instead of paying tax on a building that you did not let out, you're able here to pay for the right property that you earn the income on.
Okay.
Yes.
So, our dear taxpayers, keep your records. I feel like every webinar, every episode of Tax Mchuzi, we talk about record keeping. That's how important it is. So this will take me to Sulaiman Sendija. Okay, so I think he's just questioning us. You are too fast when explaining this. Please, also, you are mixing up things for individuals and non-individuals. Okay, Suleiman, kindly explain more on the thresholds and tax rates that apply to these groups of people under rental income. Okay, well, this was Suleiman. Did you come in a bit late? Because I felt that it came out clearly. But can we... Okay, so we're going to have this recording on our YouTube channel. And we also have a bunch of other recordings on rental income. We also have like the shorter ones that show you how to compute rental income for whether you're an individual or non-individual. So Suleiman, I would recommend that you check out some of those videos on our URA TV YouTube channel. They will be very helpful. I feel that you missed the start, but you'll be able to catch up on YouTube. But we'll do a tiny recap, maybe. Lydia, would you like?
Okay, maybe I just put a recap on the tax rate. For maybe going, I think my brother came a bit late.
Yeah, he joined in a bit.
Yes, I said in 2021, 2022, the tax rates applicable for individual and non-individual was 30%.
Okay.
However, for an individual in rental business, there was a capping on the expenses, which was at 75%. You get it? For the company, it was open. You would you would be allowed to expense all your expenses related to the production of that income. That is in the financial year 2021-2022. Financial year 2022-2023 came with new changes. There was an amendment on rental tax. The tax rate changed. For an individual, the rate applicable on rental was 12% after allowing a threshold. The threshold here, we mean the minimum amount that government does not levy tax on, which is the 2,820,000. It's just like an individual who earns income of 235,000 per month. There, that amount is not taxed by law. The tax on it is nil. So here, look, when I am an individual and I have rental and I earn like 9 million in a year, that is my gross income in a year. So the 9 million, I less the threshold, which is the 2,820,000.
Okay.
The balance is where I apply the 12% tax rate, okay, to determine the tax that I'm to pay. That is for an individual. For a non-individual, the tax rate, of course, remains, that is 30%, but the capping changed. This time, we are capping the expenses to a limit of 50%. All these expenses, by the way, the 75% and the 50%, they have a condition to verification. So when we verify them, we allow all those. You get it, eh? So the capping for the expenses is to a limit of 50%.
Okay.
Then when you remove that from your gross income, then we apply the tax rate of 30%. That is on non-individual on rental. The tax, the rental income tax for 2022-2023 still applies to this current financial year. There is no much that has happened, changed on the rental income. I think, Priska, that is.
Suleiman is a much happier man now. Yes, you have elaborated once again really well, and I think what we'll need, maybe one of these days, we'll need to just illustrate, like go through the return itself, and so that we illustrate it.
It's okay.
Yeah. Okay. So Roger, there's someone called Roger. Okay. I think we responded to Roger. Highlight on the rate for individual, and do they give a deduction for? We answered Roger. Susan Nangwale is asking: Is interest on loans to build domestic rentals? Is interest on loans to build domestic rental tax? Is rent on loans to build rentals tax deductible? if you get a loan to build your rentals?
Loan, but on a mortgage in the year 2021, 2022, the interest on mortgage was allowed. Okay? If it falls under the 75%, camping to still allows, even if your expenses exceeded and you are not yet included, you would still allow the interest on the mortgage.
Okay.
For the companies, of course, it was allowed. Remember, in 2021, it was open, but this 2022, 2023, and 2023, 2024, the camping remains. For individuals, we only allow a threshold and tax at 12%. For the companies, the expenses only are capped at 50. So whatever expense you've incurred should be within that. Then we tax at 30%.
Okay, thank you. There you go, Susan. Maganda Eli is also asking, I would like to know how someone faced with a situation where a tenant fails to pay and by law a landlord is not supposed to forcefully push him. Can the tax collector understand this? I think that's what you're hinting on. Once you know you're very transparent with us and you share with us and your records reflect that this person did not pay, and it only then we understand that, but the person didn't pay. Yes,
we understand, but it also doesn't just come like that.
Or like from word of, it has to be back to the evidence.
If I owe you money, there should be certain steps that you have done, taken to recover the money from me.
Okay.
You get it? When you don't have any steps on that, then how do I know the person refused to pay you the money? So for you to convince maybe the tax body or the officer, you should have done certain things that really prove that to us that you did really your best.
Out of your way to claim for this money.
Claim for this money, and maybe even the courts declared maybe the person was bankrupt. You get it, eh?
Okay, so what are some of those things, like let's say Eli can undertake? Because the way he's texting, he's writing, it seems like this is something he has probably gone through or he's going through.
The relationship between a landlord and a landlady and a tenant remains with them. You get it?
Okay,
for us, the tax body, we don't come in. But when those challenges come, we only understand if you've given us like the steps you've done, carried out to maybe recover the money and just fail. You get it, eh? Maybe that's where an officer can understand.
It's at that discretion.
Yes.
All right. Okay, Eli. So, the gist of it all is, still come to us and let us know what steps you have undertaken. Like the communication lines have to be very open. Okay. Rodney Kwikiriza is asking, what proof would be admissible for URA's need in case my rooms have been vacant and have not unforgiven months? How do I prove?
The only proof that I can say you can convince me is through your record keeping.
Okay.
You get it?
Yes.
Otherwise, when I look at your records and there is nothing that shows that no tenant, like the rooms were not occupied, then I will just maybe say you are like the other person who intentionally did not declare.
Okay.
You get it? So it's good to keep your records, because it's out of these records that you can use to convince a taxman or a taxwoman that in this period, room number 2 was not occupied. Okay. In this period, all these rooms were occupied. At the end of the financial year how much income you got in all those rooms.
Okay. So if I'm a landlord or landlady, what I do, every payment I get, for example, I give a receipt and I keep that record.
Exactly.
So for a room that has been vacant, I'd be like, I didn't, this is the money I made.
Yes.
Despite the fact that I have this number of rooms.
And maybe for record or to keep you on track, have it in your note. Maybe that period or that month, the room number was not occupied, or you didn't have a tenant within that period for that period. It's good to keep those notes. So for me, when we share those notes with the taxman or taxwoman, I'm able to see the picture of your business. Like in this period, all these rooms were occupied, and within this period, 1 room or 2 were not. This, of course, when they are not occupied, meaning the income.
Yeah, the income.
So I will relate it to what you projected and what actually you would have had.
Okay, okay, Rodney, there you go. And finally, John Kasumba is asking, I have registered my company with URA, but my company operations have not yet started. Am I supposed to pay taxes? Yeah.
My brother, I don't know when you registered it, maybe during the beginning of the financial year, that is from July to this period, or you registered it earlier. If you registered early, let me say for June, in June, even if it's the 25th of June, and you had only 5 days to the end of the financial year, please submit for us that return that shows that you did no business, which is a nil. Here is, we are not looking at the income. Yes, you're saying you've not started, but we want that communication. And it is through that communication that we know that ABC was not in business. You get it? Then this financial year, if he registered in this financial year, this within July to now, and you are an individual, we only, for the company, we have 6 months that we expect you to submit what is called a provisional return.
Okay.
That is by 31st of December, which is the deadline, we expect him to submit a projection or a provisional return. But we always also don't advise our taxpayers to wait for the last date.
Yeah,
you have 6 months from July to December. Please make your projection, what you expect to get in this financial year. The thing here is, do your role at the right time. Project, file your return, and that's it.
Okay, well said, well said. Okay, so Susan, she had asked her question earlier, but she says it was not, responded to satisfactorily. So let's just have another go at it. She's the one who asked, is interest on loans to build domestic rentals tax deductible?
Okay.
Maybe, okay. Is interest on loans to build domestic rentals tax, no, is, you know what? Look at the question. I'm struggling with it. It's not very clear.
Okay.
Susan.
That is?
Susan. You see, Susan? Susan Nangwale. Yes or no? Yeah.
Domestic rentals, here now, I maybe are you considering for your personal use? Because here the rental that we are looking at is the building that you put and you're letting it out for a price. You get it?
Yeah.
So if you've constructed, you've gotten a loan and you have an agreement, I think every financial institution you enter with an agreement,
that's true.
And they specifically show the purpose for that loan. And if you used it for generating that income that we are taxing, then it is an allowable deduction.
Okay.
Yes. What I only brought is like the camping, should be within the camping.
It
yes,
should be within the allowable.
Then, of course, and that specific year, that's 2021, 2022. For like the mortgages, even if it would have exceeded, we still would allow for the individual. Meanwhile, for the non-individual, it would allow for all the expenses for you that you use to generate that income. Then for this, the 2022, 2023, and this current financial year, even if that interest, all the expenses that incurred went above the 50%, what we allow as expenses is only to a limit of 50%.
We capped it there.
Okay? Then for an individual, we only allow the threshold and we apply the 12% tax rate.
Okay.
I don't know whether I
Yeah.
answered that.
I think, Susan, have we answered you? You can always respond in the chat and let us know. No, we don't leave any man behind. We want everyone to be covered. So in the meantime, well, people send in their comments. Could you please hint on voluntary disclosure, because that was also up for discussion.
Thank you, Priska, once again. The voluntary disclosure here will look at the new or secret information that you have that for us as the tax body wouldn't have known if you hadn't let us know. You get it, eh? So when you tell us this information that wouldn't have not known, then we allow you to pay the principal tax.
Okay, just
without like the interest, yes, penalty. The penalties, you get it. We allow you to pay the principal tax.
It's like coming clean.
Yes, you've come clean, you've willingly come clean, so yes. Why punish you again? But on voluntary disclosure, it has some exception. This the way you brought out that information shouldn't have been informed, say, by any advisory visit, any audit, you get it, eh? Anything that we have tried to initiate to recover. Yes, it should be something out from your own heart, that you're telling us something new or something you had kept it secret that we don't know. Okay. Then we give you to benefit from that. Okay. So that is on voluntary disclosure. And maybe what I can add on, like right now, I remember, I believe, Priska, you saw a notice that was run on the waiver on penalties and interest by 31st of December. So dear taxpayers, take advantage of that.
Yeah, that's true.
So that you can benefit and pay your principal tax. Thank you.
True. Okay, thank you so much, Claudia. It has been a really, really great show. And also mostly because our viewers, our taxpayers have been sending in their questions. So thank you for being an amazing audience. You've made it very worthwhile. As we wrap up, Claudia, just share your closing remarks. Say bye to the people.
Thank you once again, Priska. Thank you, our dear taxpayers, our listeners out there, for giving us this time to listen to what we're trying to communicate, especially now on rental income and voluntary disclosure. We urge you to play your roles as a taxpayer, file your returns at the right time and pay your taxes at the right time. Let's support our government. Let's pay what the laws require us to pay. Thank you.
Okay, thank you very much, Claudia. Just one last one. So if I'm a landlord and I have been making, my renters have been making enough for me to be able to pay taxes, but all these years I had not been paying taxes, and URA finds out that you're supposed to be paying taxes, but you haven't, rental income tax. How does that work? What's the procedure for that? Do they have to pay the backlog, or we start on a clean slate?
Of course, Priska, here, the law mandates us to even backdate to the period when you started earning this income. You get it? Then the taxes.
So this is where voluntary disclosure also comes in. So I can come and tell, the tax man this.
Yes,
okay,
yeah,
I'm
you
supposed to pay,
can,
but
you
I
can
haven't.
utilize the
Okay, the
voluntary
angle.
disclosure as long
Alright.
as you don't have any compliance activity, like telling you do this.
And if someone wants to take advantage of the voluntary disclosure, initiative, where do they go? How do they?
They visit their tax stations and they explain. Every tax station has a head. You get it? Someone who heads that tax station. They explain on what grounds they are coming. Then they will understand them.
Okay. Good things don't come to an end, and this show has been really interesting. So I think that's why the questions keep coming in. But thank you, Lodia, and thank you to Susan, John, Rodney, Ellie, and everyone who has sent in your questions. Suleiman, thank you for being a great audience. Thank you for sending in your questions. And if there's anything that remains unclear, please feel free to rewatch this video or rewatch our thousands of videos on our YouTube channel, designed to help you meet your tax obligations and know your rights. It's been great being with you this morning, and we look forward to having you on next Thursday, same place, same time. From me and all of us at URA TV, thank you for watching and good day.
Thank you.
Uganda Revenue Authority, developing Uganda together.